Hey everybody, it's Jonathan. Bonds are moving, bonds are in play. Before I get started, guys, a lot of educators out there on YouTube. For your comfort, just because the yield curve is moving right now, I am not just trading and talking about the hot topic. I've been trading bonds since 2009 now. I've been sharing videos for the last 5 years. I've educated so many people, definitely over 100 professional traders, and gurus from around the world have stolen my content, but that's for another topic. Let me explain to you how we trade bonds, why we trade bonds, and I'm going to try to make it as simple as possible. In front of you, this is our bond edge. We now have a web-based platform. We don't need Thinkorswim, so traders who don't have access to Thinkorswim can use our web-based platform to get all of our different bond spreads. But let me show you. Look at the beaker right here. And we're going to simplify things. And we're going to simplify things by only looking, I'm going to take the fight off of. You can definitely tell if someone's bullshit when they call this the fit. Fight. 5s over 10s. Fight. 5s over 10s. Fit. Clown. Here's the fob. And let's look at the knob. We are going to take off our good friend Bob. Make sure we have nothing else on here. Okay. Apply. Okay. So now we have the fob. We also have the knob. And then we have what's called the knoll. Now what I'm going to do is I'm going to take off the knoll. Back to my beaker. Boom. So long, knoll. Apply. Okay. Now, I even made a spreadsheet to break this down for you. Now, I get first time watching a video. Some of you have watched my videos. You'll understand this content a little bit better. Probably a little bit confusing at first, so let me explain. 5-year, 10-year, 30-year. ZF, ZN, ZB. Some of the most liquid future contracts in the entire world. People are very intimidated by bonds. They're intimidated by bonds because they think that they don't move and they think they're confusing. Having things that are quote-unquote confusing puts a moat around the trade. So only those willing to learn the trade are able to capture the edge of the trade. So let me show you what I did. ZF, ZN, ZB, and then I just wrote ZF, ZN, ZB. The purple line, it's called the fob. That's what the spread is called. Why is it called the fob? Because it's 5s over bonds. The knob is 10s over bonds, called the knob. So the fob is the purple line. Now, you'll notice the knob is part of the fob. So the fob can't really go anywhere without dragging that knob along. Think of it as a dog, and the knob is the tail. That dog can't go run 5 miles away and his tail not be very, very close, right? It's going to be following along. Now, this is also a different spread. I don't want to make this video too complicated. I just want to show you the possibilities of this trade. I just want to show you the possibilities of this trade. Now, the cool thing about the software that we share is we quote everything in dollars. In dollars. Because if we just quoted in ZF against ZB, you're going to get a very weird level that means absolutely nothing to you. So going back 30 days, they start at the same point and they trade. Here the fob gets a little pricey to the knob. The knob is cheap, okay? Knob rallies along with the fob. Here, the knob doesn't rally. This is actually the zero line. Why is it the zero line? Because if you bought either one of these and they're right here, there's no P&L, it's zero. That's why we call it the zero line. Up here, the fob is up about $2,500 if you owned the smallest possible increment of the fob. It's crazy how these numbers react to the zero line on any time frame, but that's for another video. You can see they come back together, right? The fob, the knob doesn't rally, the fob comes right back to it. Well, looky here. What's going on right now? Well, the purple line, the fob, this guy, the dog, he's running away. Come back, come back, come back. The tail, in that silly analogy, is not following. Right now, the knob is very inexpensive relative to the fob. Now, if you bought the knob, and you have to do this in the correct ratios, that's something that we teach. You could also go on the CME and look at intercommodity spread ratios if you want to learn it yourself. If you bought this at negative 2,600 and it rallies to the zero line, you're going to make $2,600 on that trade. Right now, the knob is very inexpensive relative to the fob. So traders might consider getting long the knob if they want to. That's a back-end steepener. There's a bunch to learn on this trade. This is really simplifying things, but I just wanted to show you what edge looks like. And when I say edge, I mean opportunity. Because right here, there's nothing to do, but right here, there's absolutely something to do, and that's what I'm going to be going over in our futures class today. Thanks for watching. My name is Jonathan Rose, and I'm the owner of Masters in Trading.